Hello and welcome to another update video about XLM. So the XLM chart has dropped in 5 waves here into the December 22 lows of the after a 3-wave move up in May 21. Primarily I'm counting that as a 5-wave move down, so I have to consider that we could just be working on a 3-wave move to the upside, even though a more bullish interpretation would be possible. But then I need to see 5 waves up instead of just an ABC structure. We're going to talk about that now. So we have reached resistance. That's a resistance area I suggested already a few weeks ago for channel members after someone requested this chart. It is just not a long-term bullish setup at the moment. Of course, it can become one, as I always say, but it needs to prove itself. So we can track uptrend potential on the shorter time frame. Just be aware that the chart context is at the moment rather uncertain, or you could say bearish, the bigger context. But we've just reached obviously this resistance area. Price got rejected from it already. Yeah, that would be expected, that we see a reaction to the 38.2 fib level, but ideally it still has a chance to push higher. Let's start at the bigger picture. Just look at the relevant levels. Yeah. So the idea at the moment would be that price bottomed here in a wave 1 in December. And this is now an ABC structure. A wave, B wave. The B wave low was in June. And now a C wave to the upside. You can see that even in this C wave, we would expect higher. Because a C wave consists of 5 waves up. In this case, yeah. So it would be a 5-wave move. At the moment, we only have 3. I mean, it can always top earlier, but then it would not even have a chance for a more bullish scenario overall. Yeah, but the ABC structure is sort of ideally what we're looking at now, and the C wave can still push higher, and we're going to talk about what are the support levels that need to hold in a minute. But looking at the bigger picture, the relevant targets or resistance levels on the way up in this C wave are 17.9 cents. We got rejected there yesterday, 23.9 cents. 31.9 and then possibly even 48 cents. So you can see the challenge is to determine where this wave 2 pullback will end. If it goes above 48 cents, then something more bullish is going on, and that might even make this wave 2 pullback less likely, and then we talk about something more bullish, okay? Even though the wave 2 is not formally invalidated until it breaks above 80 cents. So it gives you an idea of potential to the upside and what is needed to clarify something more bullish. There is, by the way, structural resistance at 23.8 cents. So we can add these horizontal resistance lines to the chart. This is important, yeah. But by the way, I will just change that to a dashed line. Yeah. So we've got this level, and that is overlapping with the 50% retracement. So we're always looking for relevant levels to watch on the chart. So we've got that level. And then we have this area around the previous wave 2 high, around 43 cents. Yeah, so this is something to watch as well. That doesn't really overlap with the 78.6 fib level, but it's still a level to watch up there. And then, of course, we're not there yet, the 80 cent level, which is the swing high of May 21. So these are levels to watch on the way up. Now let's go into the shorter time frame perspective. Let's go to the 4-hour chart. And here we can see how this C wave is subdividing. Yes, this could become something more bullish, but again, until we have that C wave complete and get into the next pullback, we don't really have a real decision moment. Yeah, because until then, a more bullish scenario where this is a 1, 2, 3 with maybe a wave 4 to come and a wave 5 to come. This is the same until we fill that C wave in. Yeah, so at the moment, we're looking at the scenario that this could have been a wave 1 to the upside here with a top on the 30th of June, a wave 2 to the downside, which bottomed on the 7th of July. And now we could be working on this C wave here, obviously to the upside in the third wave. Third wave might have completed yesterday, and we could be in this 4th wave pullback. That would be the expectation at the moment. Relevant support is in this region. This is a support area. I think I gave that to you yesterday, and we said, okay, as long as we're holding here the 50% retracement, there is a good likelihood to make one more wave up in a wave 5, which again would be a 5-wave move in itself, most likely. And we have support at 13.7 cents, 14.9 and 16.55. Only if price holds the 13.66 cent level, there is a decent likelihood for a continuation. If it breaks below that, it will turn quite unreliable. Not necessarily bearish, but quite unreliable. We would then need to establish what's going on. I mean, let's say if this is a diagonal structure to the upside, I would also allow it to come back to the golden ratio. So I might add that to this video just to give you a level to watch if we break below. So let me just break below the 13.6 cent level. If it's a diagonal, which I cannot rule out, 1 second. Then you might want to look at the golden ratio as well, which is a relevant support level because it is pulling back quite a lot. I mean, there is profit taking going on, which shouldn't surprise anybody. It's just, can the bulls now hold support? And I can say ideally for reliable upside, I'd like it to hold 13.6 cents. Below that level, we have 12.5. These are the support levels we can track, yeah. So I'm not telling you it will go higher, but I tell you that this is the support we track, and the likelihood reduces that it is going higher below 13.66, and below the golden ratio, it just decreases even more, okay? Yeah, and we need an evidence that is holding. How do we get evidence? Well, it would obviously need to reverse out of the box. That would be the first piece of evidence we get, and then a break above the third wave high at 19.6 cents would be the next piece of evidence. And yeah, then maybe in the next videos, if this continues to be an interesting chart, we can calculate the target for the fifth wave. But let's just establish a potential target already for the C wave. So we can use the length of the A wave. We go to the low of the B wave, and you can see we're already way overextended anyway. Okay, so I mean, looking at Fibonacci extensions, this has already reached the 300% extension. I mean, 22.4 cents would be the next common extension. Let's see, but I would rather than use the relevant barriers here, the relevant resistances. So it's really all about, okay, can the bulls hold now relevant support? Bear in mind the context on this chart is still overall uncertain or bearish until really proven that it's going to have the possibility and the the long term, that the bulls have the long term power to turn this into something long term bullish. Until then, all we can do is track bullish support for short term uptrend and to see if this develops something more bullish. After this last wave up, if we then hold a higher low in a wave 4 and make another higher high in wave 5, then we have a decent 5-wave move up, and then again we can track a pullback in a wave 2 for the next support area. So that's my update about XLM. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.